Have you ever wondered why some people seem to get richer when the economy is falling apart? You might have noticed that when everyone else is panicking, there are a few individuals quietly making a fortune. The question is, how do they do it? The answer lies in one key principle. Crises are opportunities for patient investors. It's during these moments of fear and uncertainty that the wealthiest people take action. But it's not about luck. It's about understanding the system, having the right mindset, and positioning yourself ahead of the pack. Today, I want to show you exactly how you can make your second million during a financial crisis. This is not some abstract concept. These are real strategies used by some of the wealthiest investors in the world, including myself, and they've proven to work time and time again. In the next few minutes, I'll walk you through 3 essential strategies to capitalize on crisis. These aren't theories. These are proven techniques I've used for decades, and I'm confident they can help you accelerate your wealth-building journey. But before we dive in, let me explain why crises offer such incredible opportunities. In times of economic hardship, fear takes over. Stocks plummet, businesses panic, and the headlines scream disaster. The instinct of most people is to get out, to sell everything, and wait for the storm to pass. And while everyone is rushing for the exits, that's exactly when the wealthiest investors are quietly stepping in to buy. What happens during a crisis is that prices of even the best companies drop. This is a unique situation where the fundamentals of the businesses, their products, services, and long-term viability haven't changed, but their stock prices often drop far below their intrinsic value. The market's reaction is driven by emotion, not logic. It's driven by fear, not rational decision-making. And that's where the opportunity lies. During these times when everyone else is selling, you can buy assets at a discount. But there's one critical thing you need to do. Stay calm, stay rational, and take action when others are paralyzed by fear. Over the years, I've lived through multiple crises, each one offering a new lesson. From the 1973 market crash to the 2008 financial meltdown, I saw countless opportunities emerge during periods of fear. It's about being prepared and having the capital to deploy when others are afraid. Let me give you a personal example from the 2008 financial crisis. The world was on the brink of collapse. Banks were failing, and stocks were being sold off at unprecedented rates. But because we had cash reserves and a strong understanding of business fundamentals, we saw this as the perfect time to invest. We made significant investments in companies like Goldman Sachs, General Electric, and Bank of America, securing favorable terms that would later lead to massive returns. If we had panicked, if we had sold like everyone else, we would have missed the chance to turn a crisis into a wealth-building opportunity. One of the most powerful strategies to build wealth during a crisis is to buy quality companies at discounted prices. During a downturn, even the most stable, profitable companies can see their stock prices fall. But here's the critical distinction. The companies themselves don't change. The only thing that changes is the price. So, how do you know which companies to buy? You need to focus on businesses with strong competitive advantages. These are companies that have something unique about them, a moat that protects them from competition. This could be a powerful brand like Coca-Cola or Apple. It could be a network effect like Facebook or Google, where the more people use the product, the more valuable it becomes. Or it could be a cost advantage like Walmart or Amazon, where the company's scale allows it to operate more efficiently than its competitors. These companies will survive any economic storm. And when their stock prices fall due to panic, that's when the real opportunity presents itself. In the 2008 financial crisis, we took advantage of these discounted prices by investing heavily in companies like Goldman Sachs and General Electric. Despite the widespread fear, we knew these were fundamentally strong businesses with the ability to recover. And today, those investments have paid off massively. But here's the key. You don't want to buy just any cheap stock. It has to be a great business at a cheap price. You need to do your homework. You need to understand the company's fundamentals. What's their competitive advantage? How much cash do they generate? What's their management like? Only when you find a great business at a discount should you pull the trigger. When you buy these companies during a crisis, you're essentially locking in future gains. As the market recovers, so too will the stock prices of these great companies. The key is to buy at the right price and hold on to them for the long term. Another powerful strategy during a crisis is to upgrade your portfolio. This might sound counterintuitive at first, but let me explain. During a downturn, you might find that some of the companies in your portfolio are not as strong as you initially thought. They might be showing signs of weakness, or perhaps their business model is no longer as competitive as it once was. This is your chance to sell off weaker companies and use the proceeds to buy better, more resilient businesses. Upgrading your portfolio doesn't mean abandoning your strategy. It means recognizing when something isn't working and taking action to improve it. A crisis is the perfect time to make these moves because the prices of strong companies often drop along with everything else. I'll give you an example from my own experience. In the early days of Berkshire Hathaway, I made some investments in companies that looked cheap on paper. But over time, I realized that they were not the type of businesses that could generate sustained long-term value. During crises, I used the opportunity to sell off some of these weaker positions and invest in better companies, companies with strong competitive advantages and the ability to weather economic storms. If you own stocks that are not performing well, a crisis gives you the chance to sell them off at reasonable prices and upgrade your portfolio. You can consolidate your holdings into stronger companies, those with moats, strong cash flow, and competent management. These are the companies that will thrive in the long run, and they're the ones you want to own. It's important to remember that a crisis isn't just an opportunity to buy cheap stocks. It's also an opportunity to evaluate your portfolio and ensure that you are holding the best possible assets. If you own mediocre companies, now's the time to make a change. The final strategy I want to discuss is one that might surprise you. It's about maintaining cash reserves and being prepared to deploy that cash when everyone else is panicking. At Berkshire Hathaway, we always keep a significant amount of cash on hand. And right now, we have over $150 billion in cash and short-term treasury bills. This might seem like a lot of money sitting idle, but there's a reason for it. Cash gives us optionality. When a crisis hits, many investors are forced to sell assets because they need liquidity. They have margin calls, or they're trying to raise cash for other reasons. As a result, prices fall far below their intrinsic value. But if you have cash, you can buy when others are selling. You can take advantage of other people's distress and acquire assets at a fraction of their true worth. In 2008, when the financial system was on the brink of collapse, we were able to deploy billions of dollars into companies at incredibly favorable terms. We invested in Goldman Sachs, General Electric, and Bank of America, and those investments eventually generated tens of billions in profits. If we hadn't kept cash on hand, we wouldn't have been able to make those investments. Cash is the key that unlocks these opportunities. During good times, it might feel like you're missing out by not fully investing, but when a crisis hits, that cash becomes incredibly valuable. In conclusion, building your second million is all about capitalizing on opportunities that others overlook. While most people panic during a crisis, the wealthiest investors take action. They buy high-quality companies at discounted prices, upgrade their portfolios, and maintain cash reserves to deploy when the market panics. I've used these strategies myself, and they've allowed me to grow my wealth through multiple market cycles. But these strategies aren't just for the wealthy. Anyone can apply them if they're willing to stay calm, stay patient, and act with discipline. The next crisis is coming. It's not a matter of if, it's a matter of when. And when it does, you have the chance to build your second million faster than you ever imagined, but only if you're prepared.